So here's something that might sound a little strange at first. Some of the biggest fortunes in history weren't made during good times. They were made during crashes, like full-on financial disasters. The kind where regular people are losing everything, and a small group of investors are quietly making billions. 1929, 2008, these weren't just bad events. For certain people, they were the biggest opportunities of their lives. And the question I want you thinking about today is it possible to do the same thing? And if yes, how? What actually happened in 1929 and 2008? Let's do a quick look at both crashes because the patterns are surprisingly similar. In 1929, the US stock market had been on an insane run. Everyone was buying stocks, regular people, taxi drivers, shop owners. People were borrowing money just to invest. Prices kept going up, and nobody thought it would ever stop. Then it stopped. The market dropped nearly 90% over the next few years. Banks failed. People lost savings they'd held for decades. Unemployment hit 25%. It was a genuine catastrophe for most. But Jesse Livermore, a trader who saw it coming, made around $100 million shorting the market during the crash. In 1929 dollars, that's equivalent to billions today. He bet that prices would fall, and when they did, he won enormous. Fast forward to 2008. The housing market had been doing the same thing. Crazy growth, tons of borrowed money, everyone assuming prices only go up. Then the whole thing unraveled. Mortgage-backed securities collapsed. Banks nearly went under. And a small group of investors, the ones made famous by the book and movie The Big Short, had spotted the warning signs early. They bet against the housing market. One of them turned a $130 million investment into $2.69 billion in about 2 years. What's the pattern? Okay, so what's actually happening in both of these stories? There's a pattern, and once you see it, you can't unsee it. Step 1, something gets unreasonably popular. Stocks in 1929, housing in 2008, crypto in more recent years. Everyone piles in. Prices climb way past what makes sense. People stop asking, is this a good investment? And start asking, how do I get in before it's too late? Step 2, smart money starts quietly positioning against it. Not loudly. Not announcing it. Just slowly building positions that will profit if things fall. Step 3, the crash happens. Regular investors panic and sell. The prepared ones profit from the fall and then often buy back in at rock-bottom prices. Step 4, recovery happens. People who bought during peak fear see massive gains. The pattern isn't guaranteed to repeat exactly, but human behavior, greed, fear, overconfidence, panic, that stuff is pretty consistent. Can you actually do this? Now here's where I want to be really honest with you. The people who profited in 1929 and 2008 weren't lucky. They had done serious research, understood the mechanics of what was happening, and had the stomach to go against the crowd when everyone else was saying they were wrong. That is really, really hard. Most people, even experienced investors, can't do it consistently. But here's what you can do, and this is actually more practical. 1. Learn to recognize the signs of a bubble, prices rising way faster than earnings. Everyone around you talking about a certain investment. News headlines calling something can't lose. These are yellow flags. 2. Don't chase. When everyone is piling in and prices are already sky high, that's usually the wrong time to join. The gains have often already happened. 3. Keep cash available. Having some money on the sidelines means that when a real crash comes, you can buy quality assets at low prices instead of being frozen in panic. 4. Stay diversified. Crashes don't hit everything equally. Some sectors hold up, some even go up. You don't have to make billions from a crash. You just have to not lose everything and maybe pick up some strong assets at a discount when others are too scared to. Here's what I want you to walk away with. Crashes are scary. They're painful for most people, but they don't have to be the end of your financial story. If you're educated, if you're prepared, if you're not carrying too much risk when things are frothy, a crash can actually be an opportunity. Not to get rich overnight, but to buy good things cheaply. To stay calm when others aren't. To come out the other side stronger. The next crash will come. They always do. The question is whether you'll be ready. If this got you thinking, drop a comment. What do you think the next big bubble might be? I'd genuinely love to see your thoughts. Like and subscribe if you haven't already, and I'll see you in the next video.